Yeah.
What is up, everybody? Logan here again with another video. I'm joined with Vance Warren today. Vance is in the Discord. He helps out a lot with our zero DTE. So if you guys would like to come trade with us, it's been really great lately. The market's been working out. And we made this video to show the Discord mainly because they've been asking, but also you guys. We have a couple zero DTE hacks if you are someone who has to deal with the pattern day trading rule, right? If your account's not over 25 grand and your margin account, then you have to be careful when it comes to day trading. See, I haven't had to deal with it in a couple of years, but it is something to always keep in mind. So I'm excited to see what hacks you have for us today, Vance, and I really appreciate you coming on for another video.
Not a problem, Logan. So yeah, the pattern day trading rule is it's an annoying rule for a lot of people. Basically, you can't open and close 3 trades on the same day within a rolling 5 days of trading days. Otherwise, they lock your account out. And this is if you have less than $25,000. I'm not going to go into why they do that, but it's a FINRA rule, and it is what it is. And so if you're under $25,000, it's something that you have to deal with, which it sucks, because as zero DTE, now especially because it trades 5 days a week, that means you really can't trade all 5 days and close trades, which sucks. Mm-hmm. So this is a couple different things that you can do to actually fake close a trade on certain underlyings, which I'll go into in a second, which will basically expand the tools in your belt and lets you be a little bit more nimble in the market. So I'm going to go over the 2 ways to do it, and then with the second way, there's kind of a bonus that you can do, which I'm going to go over as well, which is kind of cool. So basically, the first thing I'm going to bring up is that this only is going to work if you're using a cash settled underlying. So something like SPX, right? You can't do this on SPY or like on Tesla stock or something like that. It's going to blow up your account if you try to do one of these things, because it doesn't work the same way. It has to specifically be cash settled. And the reason for that is that there's no shares to be assigned. Your broker isn't going to close these trades in the last 30, 40 minutes of the day. They're going to let them ride because no matter what happens, you're either going to get paid or you're going to pay them the money that's the collateral. So that's why it works with these specific type setups. So I've got SPX up on the screen here. And so let's say hypothetically that we open up a call credit spread in the morning because the market looks like we're going to hit a limit and we want to get in for a good credit. So let's say we've opened up over here at, let's just pick the 4240, 4250 strike, right? Let's say we collected a credit of $2.30. And what happens is we put down our collateral. They're going to take $700.70, and we get a credit of $2.30. And during the course of the day, the trade is going to continue. It's going to move. And at some point during the day, right, hopefully, this trade is going to be worth less money, right, than it was at open. So the way we would see that normally is now all of a sudden to do the same trade, right? Let's say the credit is only going to be $1, right? Or the debit would be $130, right? So normally the way we've all been taught, or way we know to do it, is you sell the opposite trade. So since you have the 240, 250 call credit spread, you essentially are going to trade the 240, 250 call debit spread. That reverses the trade, you get out of it, and whatever debit you pay, right, comes out of the credit, and you make the difference. Mm-hmm. Well, if you don't want to have the PDT, right, you don't have that day trade in your account, what you can do is, because prices, right, they're going to work opposite. So what I mean by that is this. If the 240, 250 call credit spread, right, is now $1 credit, that means that the 250, 240, 4240, 4250 put credit spread is going to be worth $9 in credit, because it's going to be a $1. It's going to be a $1 credit on the other side. So what you do is you sell this credit spread. So effectively what you've done is you've created a box trade, right? But because the values of your box trade are different, what ends up happening is at the end of the day, because it's cash settled, one of these trades is going to expire worthless. One of them is going to expire in the money, right? The trade that expires in the money is going to cash settle for $1,000 because it's a 10 wide, right? But as long as the net credit that you've received is more than $1,000, you keep the difference. So if you got 230 on the initial credit, right? And then you trade the other side for a $9 credit, that's a net of $1,130. So at the end of the day, when it cash settles, you take home 130 bucks per contract. And the moment you put on that second trade, which in this case would be a put credit spread, right? The trade's effectively closed. You cannot lose the trade at that point because you've got both sides. This on the put side cancels out this on the call side, and so on and so forth. So that is a way that you can close this trade. Now, if the trade is going against you, right, you can still do this. It'll still work the exact same way. If you got in for $230, the trade now is coming up against us. We want to close it. We receive, let's say we do the put credit spread on the other side. We receive a $500 credit. The net credit would be $730. It's going to cash settle for $1,000. We're out $270 per contract. So you can work on either side. It doesn't really matter. The gotcha here is there are a couple gotchas depending upon your broker, right? So like Tastyworks, who I use, right? One of the things with Tastyworks is they charge a settlement fee for contracts. So you get hit for like an extra $5 per contract, right? So it costs you a little bit more. Plus, depending upon your broker, right? Like I know with TOS and Tasty, depending upon where you close, you don't necessarily pay a commission to close, but you pay a full commission fee to open up another contract. So you take a little bit of hit on the commissions, admittedly, because normally one of these sides is almost always going to be in the money, right? So like the put credit spread is obviously way in the money over here, right? So the bid ask is a little bit wider. So there's usually some slippage. You usually can't get the optimum fill, but you can still get a fill, and you can put the trade on and get out of it and lock in a win or a loss. And because you're not actually closing anything, it doesn't count as a PDT. And I trade this all the time on a smaller account, just to do some scalps and to make a little bit extra money on a smaller type account and to grow it. And it's really a powerful tool because I can trade that account 5 days a week, and I don't need to worry about, the day trade on that smaller account. I have to worry that, I can only trade 3 days a week because I'm at the PDT, and I don't have to hold the expiration because I don't personally like to hold expiration anymore. I've been bid a couple times with the market. Today, if you took a put credit spread today, you probably got run over by the end of the day. The market was up 50, 60 points at one point, and it was a huge bear trap. Market came back down and ended the day red. So that's one of the reasons why this is such a powerful tool. You've made your profit, you close the trade with this hack, you get out. So now there's another way you can do this, which is pretty cool. So using the same example, we open up with the 4240, 4250, we bring in that $230 credit, right? Now all of a sudden the market's gone in our favor, right? What I can do is I can still stay on the call side, right? And I'm going to sell a debit spread. I'm going to sell a call debit spread. But instead of closing the contracts, right, I just sell a debit spread, same width, right, which is a 10 wide. And what I'm going to do here is I'm going to take in a debit. So let's say I sold this, 40-30 debit spread. I pay a 95-cent debit, and now I have effectively closed the trade. I collected 230 going in. I paid 95 to get out. And the cool thing about this setup is it creates a butterfly by default. So what that means is that I'm going to have a zone where if SPX were to move against me at some point, if it were to end the day inside the zone, I could actually collect almost $1,000 minus the debit I initially paid and make the bonus.
Wow.
Now, what you can do with this type of setup, which is really cool, is on a day like today, right? If you opened up a credit spread near the top and then SPX retraces, right? You don't have to set it up to where it's like a normal looking debit spread where like they share the short strike. You could do this, right? As long as it's a 10 wide, right? As long as the debit on this trade, right? You're whatever the debit is on the second trade is going to be what comes off of the credit. So if you have a situation where SPX pulls back away from your strikes really well, and all of a sudden now 40 or 50 points away from your strikes, you can sell this debit spread for 5 cents, right? Now you've done the exact same thing. But now you have a 40 or 50, 20, whatever it is, whatever the distance between these two sold short strikes becomes a zone where then if SPX were to retrace back into that zone between the short strikes, it's a butterfly, but it's a 40 or 50 point wide butterfly that you could have gotten into for dirt cheap where you can then hit the bonus. Now, odds wise, probably not going to happen, but the market, especially right now, has been super volatile, right? We're having like 1.5%, 2% point moves every day. So it's entirely possible the market's going to jigsaw, whipsaw up and down and come out of the zone to come back into it. So this is a really great way that you can also close your spread, but keep effectively a lotto ticket, if you will.
That's incredible. I did not even think about that. What I really like about this, I would say, is just the fact that like you don't even have to think anymore about the pattern day trading rule, just because like these are multiple ways to do it, and then effectively you can hedge that initial position by turning it into a butterfly and then potentially hitting the bonus after
Yep.
it's out. So to me, it's like a no-brainer, and even something that once you get a feel for, like it feels kind of weird at first, right? Like the first time you put it on, you're like, oh my gosh, am I putting this on the right way? But then the more you do it over and over, just like when you first started to learn how to trade options, right, and specific strategies, you just get comfortable with it. And then every day you could have a butterfly lotto and a call credit spread or a put credit spread that printed because you got it right and you picked the direction right if you were right on top of it. Because you
Right.
already have a win locked in at one point, right?
Yeah, absolutely.
Have the butterfly chance. It's like you could have been, you could have made like, I don't know, let's say $1,000 on a call credit spread. And then if you hit the butterfly too for another 1,000 or $2,000 or however you size in, like that's a $3,000 day. And maybe you didn't even have to risk more than, 10 grand, 7 grand, depending on what your entries are.
One of the things with it is, it's being nimble and being able to, potentially control, what's going on in the environment. And the other nice thing about the second one, right, is that even with this trade here, right, if you were to put something like this on, right, and the debit spread because it's going against you,
Yep.
right, you still have that butterfly. So then still you might take a hit on a loss, but then you still have that lotto ticket where then if it ends up in the strikes, right, it's not potentially a full loser, which is kind of cool too. So the disadvantage to the second one, just to be fair and be honest about it, is that the market has to move more in your favor for the second one to be a viable option. And to do this like super wide type scenario, it has to really move in your favor. So the setup's not going to always be there. More times than not, the opposite trade setup will be there. But then, every so often, you're going to get a day like today where the market moves against you or moves in your favor, moves against SPX. And, you could have set something up like this and, paid 5 cents to close the trade. It didn't come back. You wouldn't have won today. But, if you think about it, right, if you're going to close the trade anyway, right, you close the trade for that $5, $10, right, per contract. If you do it every time and it just becomes the way you do it, eventually, you're going to close the trade anyway. So you're going to pay that money to close the trade anyway. This just gives you that one chance. If it hits one time out of 100, one time out of 500, you're going to close the trade anyway. It's like you've made a little bonus. You made a little extra. So it's a little thing just to keep in your hip pocket for when, for when it works out.
Incredible.
And even if you don't have to do PDT, you can close this way, right? Just to have that possibility of a big win there, especially if you're someone who trades a lot of contracts. If you trade 40, 50, 60 contracts, right? And again, you're going to close at a 10 debit no matter what. You can close the 10 debit this way, and then you leave that chance on, because I know you and we've seen enough times where, it's gone one direction, it comes back, and then it comes back again, and it would have ended up in one of these. And, if you've got a 10 wide and you've got 40, 50 contracts on, it ends up in your zone. That's like $1,000 per contract.
It's insane.
So,
yeah, that's insane. Well, is that everything you want to touch on in this video?
Yeah, that pretty much covers it. If there's any questions, obviously people can drop them in the chat, and I'll make sure I kind of keep my eye on it just to answer anything that pops up.
Awesome. Well, I appreciate it, Vance. I really appreciate you coming back on, and I like your new name change in the Discord too.
Oh, don't you? That's pretty funny.
Well, I appreciate you coming on today, and for anybody who wants to come trade these with us, we're trading zero DTE basically every day. You can find the link down in the description for the Discord. Leave a like for Vance, and comment below if you guys have any questions. But that's going to be that's going to be it for us today. We will see you guys in the next video.